Hello, today we are going to talk about Bitcoin. Bitcoin is a cryptocurrency that is designed to function as money and a method of payment that is independent of any one individual, group, or organization. As a result, it eliminates the need for third parties to be involved in financial transactions. It is available for purchase on a number of exchanges and is given to blockchain miners as a reward for their work verifying transactions. In 2009, Satoshi Nakamoto, or a group of anonymous developers, brought Bitcoin to the public's attention. Since then, it has grown to be the most widely used cryptocurrency in the world. Numerous other cryptocurrencies have been developed in response to its popularity. These rivals either try to take its place as a payment method or use it as a utility or security token in other blockchains and new financial technologies. Bitcoin is the largest cryptocurrency by market capitalization, having been introduced in 2009. A decentralized ledger system known as a blockchain is used to create, distribute, trade, and store Bitcoin, in contrast to fiat currency. Proof-of-work consensus, which is also the mining process that adds new Bitcoins to the system, safeguards Bitcoin and its ledger. There are a number of cryptocurrency exchanges where you can buy Bitcoin. The turbulent history of Bitcoin as a value store over its relatively brief lifespan, it has experienced numerous boom and bust cycles. Bitcoin, the first decentralized virtual currency to achieve widespread popularity and success, has served as a model for numerous other cryptocurrencies. The registration for Bitcoin.org took place in August of that year. This domain is HoisGuard protected at this time, which means that the identity of the person who registered it is not available to the public. The cryptography mailing list was announced in October 2008 by a person or group claiming to be Satoshi Nakamoto. I've been working on a new peer-to-peer electronic cash system that doesn't have a trusted third party. This well-known white paper, which was posted on Bitcoin.org and is titled, Bitcoin, a peer-to-peer electronic cash system, would become Bitcoin's current operating manual. The first Bitcoin block, Block 0, was mined on January 3, 2009. The following is the text, which is also referred to as the Genesis block. The Times, January 3, 2009. Chancellor on brink of second bailout for banks, which may serve as both relevant political commentary and evidence that the block was mined on or after that date. Every 210,000 blocks, Bitcoin rewards are cut in half. In 2009, for instance, the block reward was 50 new Bitcoins. The third having took place on May 11, 2020, bringing the reward for discovering a block to 6.25 Bitcoins. A Satoshi is the smallest unit, and 1 Bitcoin is divisible to 8 decimal places. Bitcoin could eventually be divided to even more decimal places if necessary, and the participating miners agree to the change. As a digital currency, Bitcoin is not difficult to comprehend. If you have a Bitcoin, for instance, you can use your cryptocurrency wallet to send smaller amounts of that Bitcoin to pay for goods or services. However, when you attempt to comprehend how it functions, it becomes extremely complicated. The cryptography mailing list was informed on January 8, 2009, of the first version of the Bitcoin software. On January 9, 2009, Block 1 was mined, and Bitcoin mining began in earnest. A blockchain and the network that powers it contain cryptocurrencies. A blockchain is a shared database that stores data and is a distributed ledger. Encryption techniques safeguard the blockchain's data. Validators, or miners, in the network verify a transaction on the blockchain by copying information from the previous block into a new block with the new data and encrypting it. A new block is created when a transaction is verified, and the miner who verified the data in the block receive a Bitcoin as a reward. They can then use, hold, or sell the Bitcoin. The data that is stored in the blocks on the blockchain is encrypted by Bitcoin using the SHA-256 hashing algorithm. Simply put, a 256-bit hexadecimal number is used to encrypt transaction data stored in a block. All of the transaction data and information linked to blocks prior to that one are contained in that number. The ledger is referred to as a blockchain because of the data that is linked between blocks. The network's miners validate transactions by placing them in a queue. In the Bitcoin blockchain network, miners attempt to simultaneously verify a single transaction. The nonce, a 4-byte number in the block header that miners are attempting to solve, is being solved by the mining software and hardware. A miner repeatedly hashes, or recreates at random, the block header until it reaches a target number set by the blockchain. A new block is created so that additional transactions can be encrypted and verified after the block header has been solved. Bitcoin mining can be carried out with a wide range of hardware and software. It was possible to mine Bitcoin competitively on a personal computer when it was first released. However, as the network grew in popularity, more miners joined, decreasing one's chances of solving the hash. You can in any case involve your PC as a digger in the event that it has more current equipment, yet the possibilities settling a hash exclusively are minute. This is due to the fact that you are competing with a network of miners who generate approximately 220 exahashes per second. Machines, called application explicit coordinated circuits, have been assembled explicitly for mining, can create around 255 trillion hashes each second. On the other hand, a computer with the most recent hardware can hash around 100 megahashes per second. There are a number of ways to become a Bitcoin miner that work. You can join a mining pool and use mining software that is compatible with Bitcoin on the computer you already own. Mining pools are groups of miners who compete with the large ASIC mining farms by pooling their computational resources. By joining a pool, you increase your chances of being rewarded, but because rewards are shared, they are significantly reduced. You could also purchase an ASIC miner if you have the financial means to do so. A new one typically costs around $20,000, but miners also sell used ones as they upgrade their systems. If you buy one or more ASICs, you should take into account some significant costs like cooling and electricity. There are numerous mining pools and programs available to join. CG Miner and BFG Miner are two of the most well-known software programs. It is essential to read mining pool reviews and learn about how rewards are distributed before making a decision. You can purchase Bitcoin through a cryptocurrency exchange if you don't want to mine it. Due to its price, the majority of people will not be able to purchase BTC in its entirety. However, you can purchase portions of BTC on these exchanges in fiat currencies like US dollars. On Coinbase, for instance, you can buy Bitcoin by creating an account and funding it. Your bank account, credit card, or debit card can be used to fund your account. Peer-to-peer payment was the original purpose for which Bitcoin was developed and released. However, its use cases are expanding as a result of its rising value and competition from other cryptocurrencies and blockchains. You need a cryptocurrency wallet to use your Bitcoin. The private keys to the Bitcoin you own are stored in your wallet, where they must be entered whenever you make a transaction. Bitcoin is acknowledged for of installment for labor and products at numerous dealers, retailers, and stores. A sign that reads, "Bitcoin accepted here," is typically displayed in physical stores that accept cryptocurrencies. The necessary hardware terminal or wallet address can be used to handle the transactions, as can touchscreen apps and QR codes. By incorporating this payment option into its other online payment options, an online business can easily accept Bitcoin, PayPal, credit cards, etc. In June 2021, El Salvador became the first nation to accept Bitcoin as legal tender. As Bitcoin's popularity increased, investors and speculators became interested in it. From 2009 to 2017, Bitcoin sales and purchases were made easier thanks to cryptocurrency exchanges. Demand slowly increased until 2017, when its price exceeded $1,000, as prices began to rise. Since many people believed that Bitcoin prices would continue to rise, they started buying them to keep. The market took off when traders started using cryptocurrency exchanges to make short-term trades. The price of Bitcoin plummeted in 2022. It was as high as $47,454 in March 2022, and as of November 2022, it was $15,731. The larger market turmoil brought on by inflation, rising interest rates, COVID supply chain issues, and the war in Ukraine are some of the factors that contributed to the decline in Bitcoin. Concerns about the stability of digital currencies have also been raised by the crash of some significant tokens and an important exchange in the crypto world. Bitcoin's rapid price increase in recent years has attracted speculative investors. On December 31, 2019, the price of Bitcoin was $7,167.52. A year later, it had increased by more than 300% to $28,984.98. In the first half of 2021, it continued to rise, reaching a record high of $68,990 in November. Over the next few months, it fell to around $40,000. As previously stated, the price began to decrease at the beginning of 2022 and has remained so for the majority of that year. In November 2021, the price of Bitcoin reached its all-time high of $68,990. As a result, rather than considering Bitcoin's potential as a means of exchange, a lot of people buy it for its potential as an investment. However, due to its digital nature and lack of guaranteed value, its purchase and use carry a number of inherent risks. The Securities and Exchange Commission, the Financial Industry Regulatory Authority, and the Consumer Financial Protection Bureau have all issued numerous investor alerts regarding Bitcoin investing. Risk from regulation, the longevity, liquidity, and universality of Bitcoin and other virtual currencies are questioned due to the absence of uniform regulations. Security hazard. The majority of people who own and use Bitcoin did not acquire their tokens through mining. Instead, they use popular online markets known as cryptocurrency exchanges to buy and sell Bitcoin and other digital currencies. Bitcoin trades are altogether computerized and, likewise with any virtual framework, are in danger from programmers, malware, and functional errors. Risk in insurance. The Securities Investor Protection Corporation and the Federal Deposit Insurance Corporation do not provide insurance for cryptocurrencies like Bitcoin. Insurance is offered by third parties through some exchanges. SFOX, a prime dealer and trading platform, announced in 2019 that it would be able to provide Bitcoin investors with FDIC insurance, but only for cash-based transactions. Fraud danger. There are still opportunities for dishonesty despite the inherent security features of a blockchain. For instance, in July 2013, the SEC filed a lawsuit against a Bitcoin-related Ponzi scheme operator. Market danger. Bitcoin's value can fluctuate, just like any other investment. Indeed, during its brief existence, the currency's value has experienced wild price swings. It is highly sensitive to any newsworthy events and is subject to high-volume buying and selling on exchanges. The CFPB reports that the price of Bitcoin dropped by 61% in a single day in 2013 and by as much as 80% in a single day in 2014. Like with any new innovation, the efforts to manage Bitcoin have been troublesome. The current Biden administration tries to put regulations on Bitcoin, but it also has to be careful not to slow down a growing industry that is good for the economy. Biden has said that he will try to stop people from using Bitcoin illegally and also help it grow. The enforcement of sanctions against cryptocurrency exchanges and individual cryptocurrency wallets, as well as the recovery of cryptocurrency payments made to criminals, are two areas in which the United States of America has placed a particular emphasis. Additionally, there have been requests for the United States to create a central bank digital currency in order to properly direct these sanctions. The regulation, which will undergo numerous modifications and laws over time, will also evolve in tandem with the world of Bitcoin and cryptocurrencies. The mining network takes an average of 10 minutes to validate a block and produce the reward. 6.25 BTC per block is the Bitcoin reward. It takes approximately 100 seconds to mine 1 Bitcoin. The investing history of Bitcoin is short, and its prices are extremely erratic. It depends on your financial profile, investment portfolio, risk tolerance, and investing objectives whether it is a good investment. You ought to constantly counsel a monetary expert for exhortation prior to putting resources into digital money to guarantee it is ideal for your conditions. By successfully validating blocks and receiving rewards, the Bitcoin network of miners earns money from Bitcoin. Through cryptocurrency exchanges, Bitcoins can be exchanged for fiat currency and used to make purchases from merchants and retailers that accept them. Bitcoins can be bought and sold for money by investors and speculators. $1 in Bitcoin will be equivalent to $15,766 in US dollars on November 22, 2022. 19,214,106.25 Bitcoins are currently in existence. As of November 22, 2022, there are still 1,785,893.8 Bitcoins that need to be mined. The first cryptocurrency, Bitcoin, was designed to be used as a payment method outside of legal tender. Numerous new rival cryptocurrencies have emerged as a result of Bitcoin's meteoric rise in popularity and application since its 2009 introduction. The process of creating Bitcoin is complicated, but investing in it is simpler. On cryptocurrency exchanges, investors and speculators can buy and sell Bitcoin. Investors should carefully consider whether Bitcoin is the right investment for them, as with any investment, particularly one that is brand new and volatile like Bitcoin. It is highly speculative and risky to invest in cryptocurrencies and other initial coin offerings, and neither Investopedia nor the author of this article recommends doing so. Before making any financial decisions, a qualified professional should always be consulted because every situation is unique. There are no guarantees or representations made by Investopedia regarding the timeliness or accuracy of the information presented here. Thank you for watching. For more financial news and info, don't forget to hit the like and subscribe buttons.